Hi, welcome to Reality Check. I'm Wang Guan. What is the state of the Chinese economy as it emerges from the global pandemic? Do economic numbers reflect the real challenges China faces? We will be talking to two top economists in the field, but first, some important things to consider. First of all, most indicators show that China is back in business. Official surveys show that 99% of China's large industries and 84% of small and medium-sized enterprises had reopened by mid-April. Industrial production, a major gauge of factory activities, grew by 3.9% from a year earlier, recovering from a recent drop. That growth rate, by the way, is twice as fast as most economists expected. Another measure of economic activity is investment. In April, China's investment in fixed assets, such as machinery and land, rose. So did property investment and infrastructure investment, though all are still below pre-pandemic levels. There is a slower recovery on the demand side. In April, retail sales, a gauge of consumer spending, fell by 7.5% year-on-year. Overseas demand has also been weak as many countries are still battling the coronavirus. In other words, Chinese factories are churning out clothes, toys, and electronics faster than consumers in China or overseas want to buy them. Given the uncertainties abroad, many are looking to China's parliamentary two sessions to provide more fiscal measures to stimulate domestic consumption. Another concern is jobs. The official urban unemployment number in April is 6%, slightly higher than 5.9% in March. But as you will soon hear from economists, this number may not include everyone who's out of work. A silver lining of this pandemic is the expansion of China's digital economy, with online sales, teleconferencing, and online entertainment thriving amid social distancing orders. Before COVID-19, China was already a digital leader, accounting for 45% of global e-commerce transactions. After COVID-19, bricks and mortar retail sales plummeted, but online sales rose 3% in the first 2 months of 2020. Company communications platform BingTalk doubled its monthly active users in a single quarter to 17 million. Leading this wave of digitization are China's private firms. At the height of COVID-19, Alipay and WeChat supported the Shanghai government's Suishenma health QR code launch to help contain the spread of the virus. Now, back to the big question. What must China do to sustain this economic recovery? How can it balance reopening the economy and preventing the second wave of the outbreak? What about trade and geopolitical uncertainties? For more analysis, we have with us Dr. Wang Qian, Managing Director and Chief Economist of Asia Pacific and Global Head of VCMM at Vanguard Investment Strategy Group. Dr. Wang, welcome to our program.
Thank you, Wang Guan.
How do you look at China's economic recovery so far? What will its growth look like in 2020?
Even though over 90% of the factories, shops, restaurants has already been reopened, but they are likely to operate at a much lower level because of the demand shock. So, to that extent, we are not expecting a very sharp, quick rebound, in second quarter, right? So, in our forecast, we are looking for the economic growth after the 6.8% decline in the first quarter to still record a modest contraction in the second quarter, essentially flat. Right, and then it will be only in the second half that you start to see more meaningful recovery of the Chinese economy. One, the global economy will recover from the recession, and two, we will be expecting more stimulus, especially on the fiscal side, to kick in to boost up the domestic demand. I would say, China will get back to the pre-crisis level in terms of economic activity much quicker, right? So by the end of this year, we should be seeing Chinese economy get back to normal already. Well, if you talk about US or European economies, they are probably only coming back to normal by the end of 2021.
What further stimulus can be expected from China's two sessions, and your opinion on China's policy priorities right now?
I think we probably should have a much lower growth target this year. I mean, that would, increase the tolerance for government, tolerance for slower economic growth, because I think the policy here is trying to cushion the downturn, provide, to cushion the downside risk instead of overstimulating the economy. Because I think the past experience has already shown that it's probably too costly to overstimulate, especially over reliant on the monetary policy front.
Just how important is it? Give a sense of it. When it comes to the role of consumption in boosting the Chinese economy.
So when you look at the U.S. economy, for example, you do see that consumption, household private consumption is about 70% of the overall economy, right? But in China, when we think about the household consumption, it's actually probably less than 40% of the economy, right? So I think there is a lot of potential for China to boost up consumption, in the long term.
China's, March urban unemployment rate is 5.9%. How do you interpret this official number? What needs to be done to address the issue of unemployment?
Actually, it is still underestimate the pressure in the labor market, right? I think one, it failed to capture the migrant worker who lose their job and then they just go back to their home in a rural area and then they dropped out from the employment survey. They are not counted as unemployed anymore. And the second thing is that I think they failed to capture the underemployment. In many of the business, especially in many of the state-owned enterprises, you saw that people are still employed. They still have their job, but they are not working. I think one of the silver lining is that a lot of the job loss actually is temporary.
And then there are also questions about damages done by the coronavirus to global demand, U.S.-China tensions, and geopolitical uncertainties. For that, I talked to Martin Raser, country director for China at the World Bank.
I think there's not much in the short run that China can do about the state of global demand. That depends much more on the actions that other countries take to achieve their containment and to be able to reopen their economies. If that happens in the second half of the year, then I think China can look forward to recovery of external demand, which will help its own recovery. But because that's uncertain, I think China can't wait for that and needs to do more stimulus at home. That's what or support to the recovery at home. That's what I talked about earlier when I spoke about green investment, when I spoke about more social transfers, particularly to migrant workers, to unemployed, that are likely to use additional money for consumption because they don't have a lot of savings. So that's on the economic side. I think on the broader question of how to deal with a hostile environment, I think the answer is more opening up. The answer is more transparency. Invite the world to see that you've done nothing wrong. Show them, that you're open for business. You're open for business on transparent and equal terms. That you care about the rule of law. That you care about foreign investment. And I think, we've just seen over the past year a number of initiatives to make it easier for foreign investors to come in, the financial sector, in a number of other areas. I think that's the right way to go. You want the impression of the world to be a China that, in the face of criticism, isn't defensive and doesn't close down, but says, okay, let's talk about it. Sometimes you have good points to make, sometimes we'll disagree with you, but at the end of the day, we are interested in, being a business partner and opening our economy, in continuing to benefit from the opportunities that we have by trading with each other, by investing.
Great insight. And that will do it for this edition of Reality Check. For more, log on to our website at cgtn.com or to your favorite social media platform and search for Reality Check with me, Wang Guan. I want to thank you so much for watching, and I will see you again soon.